Hey everyone, it's Alissa Coram here. Now, we had Jared Tendler on IBD Live. He's an author and mental game coach for not only traders, but also professional athletes and poker players. And he gave some great practical tips for how to understand how our emotions impact our trading decisions, which is something that's especially helpful on volatile trading days. Check it out. Jeff is saying, Jared, can you speak to the emotions during a volatile time like today with thousands of dollars or more swinging on your P&L within minutes?
Yeah, I mean, it's easy for emotions to spike. There's this sort of differentiation between emotions that are a more pure reaction to what's happening that's going to help guide you towards those sort of intuitive decisions. And then there are emotions that are more based off of flaws and biases and illusions and wishes and maybe a lack of, kind of skill in being able to manage days like today. Ideally, right, you ought to be able to look at those big swings in P&L as being just information, right? They're either helping you to make objective decisions, and if they're not, then it's irrelevant. It's just noise. It just becomes part of the noise that exists within markets and within the news around it. So if you can't do that, then you have to look closely at what specifically you're freaking out about, right? There could be some kind of future projections where you think that like your account's going to go to zero, or that this position is going to, completely wipe you out, or at least get wiped out if you're not properly risk managing it. And so the emotional reactions have to get understood. There's a lot that can happen here. A lot of it, oftentimes gets, kind of under the category of fear in a situation like this, and that kind of over aggressive and thinking things are going to be negative, like the kind of excessive pessimism, if we want to call it that, oftentimes can happen because in the past you may have blown a couple of accounts and lost a bunch of money, and the pain of that, right, still sticks with you. It's a little bit of scar tissue in a sense. And then today, right, reminds you of those days, and you don't want that to happen again. So how do you deal with that? Well, you got to kind of have to remove the pain points of the past. But at the end of the day, right, our goal is to keep chipping away and skill-based, right, from a mental standpoint, right, be able to develop more and more skill in seeing this as just information. Because again, if it's not guiding you towards a better objective decision, then it's just noise.
Mm-hmm. So what are your thoughts on compartmentalizing? Is that like a appropriate way to handle things, or is that a not so great way of handling things?
It is. It's not. I mean, if you have proper risk management, right, this is not money on the line. This is just, data points, right? This is not, your edge is earned in a way that's just not how most people think about making money, right? If you're a retail business and you're selling t-shirts and you have a big blowout sale and you, let's say, sell $10,000 worth of t-shirts today, but then tomorrow there's $8,000 of returns, right? And you kind of have that high volatile type of business. Well, that's a lot more like what trading looks like. But most retail businesses aren't like that. Most businesses aren't like that. Most people get a salary, get a paycheck, and they earn money in ways that are much more pragmatically, easy, just kind of easier for the brain to understand. But when you are a slot machine, and in this case, you are the one, you're the casino running the slot machine. And so, yeah, there's going to be times where you're going to be paying out a lot of money, and there's going to be times where you're making little bits, and it's just that little bit that you're kind of churning out. The big ups and downs are just noise. If you're making, 5-6% on your money month over month, I mean, you're killing it for one. But that's just like, so the amounts that you're making in actuality over time, are small relative to what you make. If you make $10,000 today, did you actually make that, or did you just have it deposited into your account, and then over the course of a month, that's how much you're going to make in sum total, so you're going to be break even the rest of the month? I mean, being able to kind of recompartmentalize, as you said, right, what making money looks like in trading is really, really important to grasp, because if you don't, right, you get sucked into the roller coaster of emotions that come, and your emotions just sort of ride this wave of price action. It's not right for making good decisions.
Yeah, and it's a pretty big roller coaster in the last couple of minutes here, but as expected, even though there's so much unexpected with the end result of today, I think one thing that we could expect is, hey, it could be pretty volatile intraday. Okay, another question for you, Jared. This is from James. Wants to hear your thought process relative to when traders are in the groove. If you're, should you acknowledge that you're kind of on a hot streak and be more aggressive, or is that a dangerous path? How should we think about those sorts of things?
It's a dangerous path. The second you really recognize that you're in a groove and you should be pushing things more, that's how you know that you're not in the groove and you shouldn't be pushing things more. Yeah, I mean,
Good point.
it's
Yeah.
like it's the classic, right? Pitcher's got a perfect game, no hitter into the seventh,
Yeah.
and becomes more aware of the situation, right? That by definition, your awareness and your perspective cannot be as precise as it was before that moment. So if you're aware that you're really in the groove and killing it, right? I would argue that your confidence has actually become a little bit unstable and you're actually a greater risk than you realize.
So what's the trick to fighting against that?
So it's kind of a classic kind of return to B game scenario. There's a construct that I use from sports, right? Everybody's got kind of an A game, a B game, a C game, right? C game is you at your worst, A game is you at your best. And so if you kind of consciously go back to trying to hit base hits, or, trying to just make good pitches, or just getting back to your bread and butter of what makes you a good trader, that's a way to kind of get yourself kind of restabilized. And then naturally, if you are still really in a groove, your mind and your emotions will kind of guide you back up to that, kind of optimal level of focus and poise, because you don't want to get kind of too drunk on your own supply here, right? Thinking that you're better than you are, or thinking that you're going to make more money just because, you can't lose right now. I mean, that's a surefire way, to have the carpet ripped out from underneath you. And when that happens, right, it's so often overconfidence is probably the most underknown problem in the industry. And so what often happens is you get overconfident in a scenario like this, and then you take a couple losses, and all of a sudden what happens, right? Revenge trading creeps up, and all of a sudden you are going to start to fight against your own downtrend that was caused by you, and then of course then you're only going to dig a deeper hole. So to really kind of counteract that, you got to make sure that you are consciously backing yourself off the top of your own mountain here, and just get back to something that's more solid, and then just let yourself kind of naturally climb back up into a better spot, and then keep an eye out for when you start to feel like you're pushing edges that aren't there. It's so easy to get seduced into, because overconfidence feels really good, and yet it's so wrong.
Yeah, and I'm going to switch to Market Smith here to show this is a weekly chart of QQQ. And I mean, we had just such an incredible move in 2020 and 2021. So I feel like a lot of us had to adjust our thought process and our strategies when we did start seeing things deteriorate in 2022, and it has been a very tricky year. So I feel like it was probably pretty easy for a lot of traders to fall into that overconfidence trap, and then that really could have hurt them in the beginning of 2022, just thinking, oh well, the market's going to continue working how it has been the last couple of years. There's no way that the environment could be changing.
Yeah, it's so easy to get caught in that trap of, oh, I've seen this before. This is what it is. And I think, if you're overconfident, you're just not asking good questions, or you're not even asking questions anymore. You're just sort of making assumptions without really kind of questioning it. So I think, a very simple one to make sure that as part of your decision making is like, how might this time be different? And if you can't come up with an answer, then you're overconfident, or you're not doing your due diligence and actually you're doing the research.
Well, I hope you enjoyed those insights from Jared. It was just a slice of our conversation that we had with him on IBD Live. So you should definitely check out that full episode at investors.com/IBD Live when you get a chance for more great information from him. And also be sure to subscribe to my channel for more IBD Live clips and tips for traders. I'll see you next time.